one of the topics within finance where we focus is corporate valuation. So we work with young professionals in training them about corporate valuation. And if you look at the word corporate valuation, what does it mean? It basically means if you look at a business, if you look at an asset, and if you were to value that, what is the approach, right? And you can define value in multiple ways. You can define value in terms of what is the intrinsic value, what is the relative value, what is the strategic value. You can talk about the book value of an asset. Typically, when you are talking about an asset in finance, it's anything which has a cash flow attached to it is something which we can value, right? If you look at other asset classes, let's say crypto or let's say art, if you're talking about rare paintings, those are also kind of an asset. It's difficult to value those assets, right? In a traditional sense, when we are talking about corporate valuation, we are mentioning the assets which have a cash flow attached to them, right? And that's the kind of approach we take to corporate valuation as well, right? So the answers which we are looking for is okay, how much is it worth? And why is it that it's worth that much? And what would change it, right? So, what are the drivers of the value? So, ultimately, that's how you want to look at any asset or any company, right? When you're looking at from M&A perspective, or you're trying to, let's say, reach a fair value of an asset, right? From an accounting perspective, we always look for fair value of an asset, right? So imagine a M&A deal where you have a sell side banker and a buy side banker. So basically, sell side banker represents the seller and buy side banker represents the buyer. And then there is also a fair opinion, which generally the board requires from an outside agency, right? So let's say if an investment bank, let's say X is representing buyer A and Y is representing seller B, then there is also a third opinion which the board will generally ask for, that what is the value of this asset, right? And that's how generally the deal making works. So it's only the converging of these numbers which lets us to close that deal, right? It's not only one person's opinion or only the banker's opinion, right? So that's what we mean by valuation, right?